3, 2, 1, let's go.
That's right, folks. This is On the Money with your financial advisor, Ryan Wheelis. I am the host for the hour, Spike Spangle. Ryan, come on, man. Market volatility. Are you ready to dive into this show? Tell us what's going on. What do we need to react to? What do we not need to react to? What do we do right now, Ryan?
Well, Spike, in most cases, you don't do anything.
Okay. Buy and hold? Just sit still?
Well, listen, I mean, if you are in a situation to where losses in your accounts are making you feel like your financial security and your peace of mind is slipping away, you've already taken the risk. So in order to not make a mistake with the amount of risk you've taken, you're likely in a situation to where if you're in the markets, you should probably stay in the markets. All right. And the reason why I say that is, it's the cliche, right, is, give me more time. The markets always come back. You got to stay in the markets. It's about time in the market, not timing the market. And as much as those things are cliches, they are somewhat true. If this happened to you, though, there are other options and are other ways to invest. But the last thing I want people to do right now is to start panic selling, thinking that, this is the big one. I'm going to lose all my retirement savings. I'm not going to be able to retire at all. I'm going to have to go back to work, all those things. I do believe in 2 years, 4 years, 6 years, 8 years, the market will be higher. All right. And the reality is we did a podcast. I support Chad Roba's show on the Resilient Show. And I did a podcast with him last week at a studio here. And it was really interesting because we talked about the markets. And I took out a sheet that I had, and I went back to what the stock market was under going back to John F. Kennedy. And the S&P 500 index was at 170. Then I looked at it.
170. The number.
Yes, 170. And so then I fast forwarded to, I want to say it was Reagan. And I'm not quoting the numbers exactly, but I want to say when Reagan was in office, it was around 700. All right. Then when Trump left office the first time, it was 3,500-ish. Then Biden left office, it was like 5,300-ish, right? So what's the common theme here is that the market doesn't care who's in office. It's going to go up over time. And that's the way it works. It doesn't mean in the interim, you're not going to experience some ups and downs in the markets because, quite frankly, Spike, the market is guaranteed to do three things. And if you have money in the markets, you need to understand these three guarantees. And you also have to live with these three guarantees. So what are they? The first is the market's going to go up. I absolutely guarantee you the market is going to go up. No question about it. The next one is the market is going to go sideways. I absolutely guarantee you the market is going to go sideways. And then the last one is the market is going to go down. I absolutely guarantee you the market's going to go down. And folks, I'm not being comical here or making light of people losing money in the stock market. That's a very disheartening and very concerning thing. However, it is important to understand what the market does. And Spike, a lot of people are investing their dollars in a way to where they are dependent upon the performance of the stock market to live the quality of life they desire in retirement. They took the risk option, the risk on approach to generating retirement income with their life savings. It doesn't have to be that way. There are other ways out there that you can generate income in retirement that does not rely upon the stock market to produce the income you need. And the reality is, Spike, what we've learned here is that there are personalities of retirement income. And there's some basic ones. There's the risk-off approach, where, Ryan, I've got a pension, I've got Social Security. What my pension doesn't cover and my Social Security combined doesn't cover, I have the rest of that made up from an annuity from an insurance company that's guaranteed to provide me income for the rest of my life. So I have all the income that I need, regardless of what happens with the stock market, the economy, or interest rates, or presidential elections. All right. That's a risk-off person. They've got it wired in down markets for sure. Now, to the contrary, if the markets skyrocket, that risk-off person is going to miss out because their investments are not going to perform in a way that capture those upside gains in the stock market. But what are you investing for? Are you investing for long-term growth, or are you investing to make sure that you have a guaranteed paycheck as long as you have breath in your body so you can enjoy the time you have left on this earth without having to worry about the stock market taking your lifestyle from you? The other spectrum is the risk-on spectrum, to where you are totally fine with the ups and downs of the stock market. You understand the markets go up, down, and sideways, and they're guaranteed to do it. You understand in some years you may be able to take out more out of your portfolio, and some years less. In maybe a 1, 2, or 3 year period, the market may be down. Maybe a 1, 2, or 3 year period, the market may be up. But you're comfortable riding the ups and downs of the market, and you're in a situation to where you're not going to panic and want to exit your investment strategy, your long-term investment strategy, when the market pulls back 5, 10, 15, or 20%. And somewhere in the middle of that is a hybrid person that likes a little bit of risk off and a little bit of risk on, a little combination there. Mm-hmm. That, by the way, as a financial advisor, is where I take my financial advisor hat off oftentimes, and I have to put on my marriage counselor hat, right? Because one person in the husband and wife team wants it one way, the other wants it another way. We sometimes meet in the middle and find that some common ground. Folks, the reality is we have an entire team of certified financial planners standing by right now to help you. And that team can show you the benefits of a risk-off approach to income, a risk-on approach to income, and a combination hybrid risk-off, risk-on approach to income. And you can at least see the differences for yourself. And what we do is we actually stress test those plans and show you, hey, what will this look like in a 10% down market, 20% down market, 30% down market, 40% down market? What does it look like? All right. And you will have a better understanding of things so that when the next market crash comes or downturn happens, and it's going to happen, by the way, a 20% decline of the stock markets are very, very common and will likely be more common in your future. So when those things come your way, you will have an understanding of how things are going to work. And we can remove your dependency on the stock market with all your income and retirement, your paycheck from retirement coming from the market. And all you got to do right now to just test the waters is text the word plan to 21,000. You got an iPhone, you got an Android, pull it out right now. If you're driving, hand it to the person next to you. Go to your text message box, hit the tap to button, type in the number 21,000. That's 21000. And then in the plan body, text body there, type in the word plan, PLAN, and hit send. Now what happens next? Really simple. Joel of my team is going to reach out to you. He's going to find out what you're trying to accomplish, what you've done so far to prepare yourself for retirement, what you're already doing, and go to work and find out how we can make it better. Because if we can make something better, you have a right to know that. But you may think to yourself, well, I've already got a plan. Maybe you do. Do you have enough confidence in that plan to have it tested out by a second opinion? Have it stress tested to make sure you are, in fact, on the right path? Are you a do-it-yourselfer? I'm good. No problem. Okay. Do you have enough confidence in your do-it-yourself plan to have it stress tested to make sure it, in fact, does hold up to down markets and it will last as long as you do or longer? These are things that my team is standing by to help you with right now. And all you got to do right now is text the word plan to 21,000. You can also call the show, 844-944-7555. Again, 844-944-7555.
I think when we come back, especially for the radio from a break here, if we can talk about if you're 6 to 12 months from retirement, what you should be thinking about and doing. If you're 5 to 10 years away from retirement, what should you be thinking about and doing? There are things that you can control. There are things that you can't control. Whatever's happening in D.C. and all the different announcements and conversations between the Fed chair and interest rates and tariffs, nobody ever has control over those things. We as the investors, don't. But you can control things like how much risk you're exposed to, when are you going to be turning on income, how and when you take your Social Security, what kind of fees are you paying inside all of the tools that you're using or not using. Let's control the factors today that you can control, and it starts right now with a phone call or a text. 844-944-7555. Or text the word plan to 21000. Hit send. We will get in touch with you, set up that appointment. More with Ryan Wheelis and On the Money when we get back right after this.